All right, we are going to most likely step away from the miners here in this episode and just talk general moves in the markets. I mean, just a plethora of economic data that dropped, and we had earnings that continue to come into the market in the mornings and the afternoons. Markets could go either way, but what we do know is that the S&P, the Nasdaq, continue to run and push new all-time highs. The intraday moves in the markets are somewhat mixed, and then what I continue to see, at least from my point of view, is about the last 30 to 60 minutes of trading, we see more buying that comes in to prepare for the next day. And so we are going to try to make sense of all this and get some technical analysis thoughts from our good friend Frank Cappelleri from Cap Thesis. And if you are watching this on the YouTube channel, I would suggest he is going to share some charts that he has been sending to his subscribers and readers as well. So, Frank, thanks so much for giving us some of your time this morning.
Trevor, great to be here. Thanks for having me on again.
Yeah, all right. So tell me if I'm crazy, but what I just described, is that kind of what you're seeing as well? Kind of lower breath pushing these things higher, mixed intraday, and then end of the day trading comes back in and moves things up again?
That's definitely been the trait recently. I would say that up until really the last 2 weeks, breadth has been very good. I think it was going 75 to 80% of the time, or even more so, for most of June to July. I'm looking at the S&P 500, so more advancing stocks than declining. So underneath, the surface has actually been pretty strong until a little bit over the last week and a half or so. So we'll have to see how that works, of course, because as we know, the biggest names drive everything, and if they get a little too top heavy, we've seen them pull back, and of course that will pull back the market. Now, in terms of seeing the bid at the end of the day, I think it's a very important point because we look at 5 specific traits about how to determine if the market is in an uptrend or downtrend. And one of those is just how the market closes on a rolling, say, 4-week basis, and it's been consistently higher. And so from my institutional sales trading background and knowing what clients, the strategies that they want to use, algorithms that they've used over the last number of years, right? What do you have to do if you think the market is going up? You have to participate. So using participation type algorithms, whether that's trying to match the VBOP for the day or just participating in volume. And that's what you see over and over again when no one wants to make a stand. Because when an idea, the momentum is driving this, we have to keep going. And that then tends to work upon itself, momentum, even on an intraday basis. And that's when you kind of see the market finishing near the highs like that, like you just described.
Yeah. Okay. So the note this morning actually was pretty thorough. There's a lot of things you're looking at here. From reading it, Frank, you remain very bullish. So it looks like the charts, from what you're seeing, remain constructively bullish, despite things being elevated and maybe that greed index continuing to top out pretty high. That it can remain high for quite some time. So maybe we just pull up what you want to share here and just kind of walk us through some of the stuff that provides that constructive feedback that you want to see.
Okay. So I actually wanted to start with, we can jump around a little bit. I wanted to give kind of the cautious view first, just to make sure we have all sides of the spectrum here. So in terms of what we expect, seasonality, I think is widely understood at this point. And really, for the most part, you can make the case at any point that the market can pull back. And so one of the things we've been watching is just this. And I think we've seen this chart in many different ways. And this is, from the daily number, it's a very good piece as well. So just showing that we're in a post-election year, and typically what's happened during that time frame, since 1950, is that you do see a pause, right from late July all the way to October. And again, this is nothing new, but in terms of how the market has worked so far, very similar. Now, we know at the beginning of the year we had a bigger pullback than normal, but since that point, of course, has caught up to that. So have that. So seasonality suggests at least a pause, if not more than that. And so another thing that I looked at recently is a study from Wayne Wiley talking about how we had a new high in the second half of July. So there's all different ways you can massage these statistics, but I thought this was an interesting one. And so I'll get a little close up here, and you can see in the bottom that when that happens, after, again, second high or a new high in the second week of July, you have a good amount of chance of having a pullback in those 2 weeks to start August. And again, you can understand why, right? the market rallies. You get to the end of July, you get a lot of the big names reporting. It happens after a good few months, then there's a pause. So that rhymes as well with what we're seeing. Sorry, back to this. Okay, there we go. And then you have compressed volatility. And so this is one interesting way that I was looking at that Sentiment Trader wrote and talked about using the Bollinger Bands on the VIX. And so I'm just reading from what it says here on the side for viewers or for people that can't see the screen. Since the end of the global financial crisis, the VIX's Bollinger Bands compressed this tightly 5 other times. So within the next 4 months, the VIX jumped by more than 50% every time. It's even more unusual to see the VIX this compressed during July and August. And this is just a chart showing the instances going back to 2014. And then this is a close-up view of that I did just looking back over the last few years. And as we know, the VIX tends to spike, but we don't see sometimes this is the Bollinger Bands on top. This is the Bollinger Bands width at the bottom. So that just means as volatility decreases, the VIX obviously moves lower, but the range that it travels in also moves lower. And when that happens, those Bollinger Bands, which measure two standard deviations above and below a 20-day moving average, also get compressed. And we can see how that's happened here and what happened in the past. Just looking at 2024, we know when that happened, and it then led to a big VIX spike, right? So that also lines up with the potential hiccup, if you will, if not much more than that, if you're looking at maybe out 2 or 3 months. And so in terms of sentiment, the Trevor you just mentioned as well, and here it is. The Fear and Greed Index has been either at or near extreme greed for the last few weeks. First got to extreme greed on July 7th. And as, of course, that's happening as the market is moving higher. But, I think that this is interesting because if you look deeply into this indicator, there's 7 different factors that go into it. And some of them are looking at New York Stock Exchange data and some other things. So it's not exactly a measure of sentiment in terms of a survey, if you know what I mean. So I think it's still interesting. It still pinpoints when things the pendulum swings back and forth. So I decided to ask Twitter the other day, or X, what the next 10% move in the market will be. Now I picked 10% because it's not a small number, right? It's obviously a correction. Right. We just came out of a correction, so it's like people have to think about it a little bit. But 500 people responded, and we have a pretty good majority, 60%, expecting a downturn. Now, again, it seems like everyone is exceedingly bullish right now. Everywhere you look, charts talk about it. But in terms of trying to have them pick which side they're going to, I think, number one, 10% would be right around 57.30 or so. We were there not too long ago, and the market really touched that 5 or 6 times over the last 6 months. 10% from here higher will be above 7,000. And I just think it's very difficult for people to grasp having the market go that high. Number one, it hasn't been there. Number two, talking about much higher numbers. But, and I should have done this, someone responded, if you said 3 to 5%, I would have definitely said down. So I think what we have here is people that are going to say they're long-term bullish, but cautious right now. And for a short-term pullback. You have the perma bears, of course, spending much more than that. But I think we're in a very interesting time where both sides right now would be very accepting of 5% pullback. Bears, of course, want it. From my perspective on the chart side, you just need more patterns to be able to form. That can only happen from a bullish perspective if you have some two-way volatility, and those things can tend to work over time. And so going into the successful bullish patterns, which you mentioned, I've had both of these charts here on our grid since middle of May. And it's just looking at patterns based on, either it's inverse head and shoulders pattern, cup and handle, all the classical formations. And again, these huge bullish formations only could have been formed if we had a very notable volatility event before that, which of course we did. So currently the highest one is 67.45. One that's a little bit closer, 65.55. We can see how this happens. And I have this colored here just to show that this would be the danger zone. And it's much more pertinent after the breakout, because that's always when the breakout is tentative, right? We don't know if it's going to work or not, but as you tend to extend it a little more, the most important thing about both of these is that the cushion between the breakout zone and where the market currently is obviously widened. So what that does is it gives the market the ability or the luxury of pulling back much more than it has so far, of course, only 3.5% at the moment from high to low, and still have these in play. But I think much more significantly, it gives it the ability to form new bullish formations to which to take advantage of. And once those happen, then you can talk about having these upside targets acquired. And so the other part of it is that we've had failed bearish patterns, and really you have to look really hard in the S&P 500 at least to find these patterns at all. And one way I was looking at it is just profiling the uptrend recently as three different, you can call these triangles. A lot of people refer to this as a rising bearish wedge pattern. Now, I don't really like that term because anything that goes straight up like this is not bearish to me unless it reverses lower. But what it's trying to show is eventually, when you get to the apex of that triangle there, momentum maybe is fading a bit, and as things then start to slow down, they eventually can lead to a larger downturn. That's really what happened on the way down right around here, as you remember, from March to April as well. And so we've had now 2, maybe 3 attempts to break below, and all I did was lead to just a few days or a few weeks of a marginal pullback each time. And I put this chart on X, and it got a lot of feedback, both positive and negative, talking about I definitely expect this one to fall down, this one someone else says is going to fail again, and so forth and so on. But I think what will happen is we're just trying to detect a change of character in the marketplace, and at any point, of course, we can see a bigger downturn. We know that's going to happen. I think what's more important is what the market does with that. Of all these people that are long-term bullish, waiting for a dip, are they really going to buy the dip? And if that buying of the dip is not immediately rewarded with new highs like everyone's been used to, then I think that's what gets interesting. How long will people hold on? Or are you going to see a more aggressive unwind that we haven't seen before? And needless to say, there's not a lot of short-term support underneath here. So this could really, once one really happens like that, it could really pull down quickly.
Can I hold on to
Sure.
that point just real for a second here, Frank? Because I'm looking at these charts, and obviously I'm not the technical analyst quite like you are, but I'm just curious. I have this continued give and take philosophy regarding gaps in charts. Do gaps need to be filled? Is this something we look at that when we talk about projection, not a whole lot of support underneath, where we're looking to fill some of those gaps?
I think there is definitely a reason to think that. I would say mostly the near-term gaps obviously have a much more propensity to get filled. There are some you can point to that are way below, never got filled before, that people forget about, right? But I think it's very important, especially now, say for earnings season, because you'll see gaps all the time, and whether it's a gap to the upside or downside, very important to see those hold. Like for instance, with some of these bigger names now reporting, like Meta's huge gap this morning, that needs to hold. Right? Unless if that has a massive reversal at some point in the near future, that could really change the complexion of that.
Okay. Thank you. Thanks for entertaining that question.
Oh yeah, no problem. So I think one thing just to keep on the S&P 500 for another chart here is that the volatility, of course, is extremely low from a VIX perspective, but the way I look at it, two-way volatility as well, we really haven't had any 1% declines or gains so far this month at all, which we haven't had that in a calendar month since November 2019. And if you go back in time and look at the year that we had most of those occur, this is 2017. So this is the whole year. As we know, that ended up being the most or the least volatile uptrend in the market's history based on how much of a drawdown we had from a high at any point, which was about 3%. And so along the way, I wanted to show this because many times it got overbought from a 14 RSI perspective. We can see this here on the bottom chart. The dark red shows extreme overbought. And so any point around this time, you could make the case that the market needed to pull back more. It was just going up on a snail's pace for the most part, and it just stayed overbought, kind of like you were talking about with the extreme greed. And so I started to really, at that point, I changed my way of thinking a little bit because I was also expecting something different. And so, well, what needs to happen really to change one of these overbought conditions into something more treacherous on the way down? Well, we need to see bearish patterns getting taken advantage of. So if we look at this, it was actually a series of failed tops So people who are listening, all we have basically 10 different times the market looked like it was rolling over in 2017. Sometimes it got a marginal breakdown, sometimes not at all. And so if you just kept this in the back of our minds, we never had a downside follow through from a bearish pattern that would have kept us in this trade, so to speak, the whole time. And as the market extends more now than it has, and it touched about on the piece today, it makes us think of maybe we're entering this phase where it could just float like this, more than it has recently, but turn into something like 2017. And the interesting part of that, as we know, that was the first year of Trump's first administration. And however you think of the administration, we knew that at the time, no one knew what to expect. We were expecting the most volatile presidency ever. And what did we get? The least volatile trading year in history. Follow me. Yeah. So anyway, sometimes it's crazy to think of, but that's exactly what happened.
Yeah. Oh man, fascinating.
So I have a few other, I just want to actually skip to semiconductors, just because I think it's, obviously they're always on the radar here, and I think this is a very interesting way of looking at it. So this is semiconductor SMH ETF, and as we know, up a ton, say about 70% or so from the low. And so at times, we're going to see this very steep uptrend line eventually break. And so that actually happened at the end of June. Market pulled back a little bit, but then didn't break fully. And so some people, again, who are bearish on this will say, it was just a matter of time before this completely rolls over. And at some point that's going to be true. But if you go back to 2020, of course, very similar, and we're seeing a lot of comparisons to that time period because of how strong the snapback was. Right, very beginning, this is a line drawn from the March 2020 low through the end of April. And the same type of thing happened, where there was a downside break of a very steep uptrend. And if you go back to that time, as we know, it was complete uncertainty. The world was on fire. No one knew what to expect. Obviously, stocks are moving higher, but there wasn't too many people that believed we were going to blast through new highs. So as this continued, what happened? The market continued to rally. And as we can tell, numerous times over the next 6 or 7 months, other uptrend lines were broken. At any point, we could have said the end was coming, to the point where you go all the way out to the end of 2021, there were 10 different uptrend lines, all broken. And I can guarantee you there was someone pounding the table on bearish each time this happened, until, of course, 2022. So again, if you look at this, and I don't have the chart to show it, but each one of these pullbacks could have been a bearish topping formation, just that never got downside follow through. So I think it's much better, at least how I look at the market, is just not try to pinpoint a top in a market that has this much momentum. Yeah, we're going to miss maybe the first 3 or 5% down, but if there's really going to be a big downturn, you're going to see things start to fail a little bit more. You're going to see topping patterns form. You're going to see breakouts start to fail and see lower highs. So that's really what I'm looking for from a S&P 500, SMH, really any perspective there on equity side.
You're just not seeing it. You are just not seeing it right now.
Yeah, I mean, it's again, it can come at any time. I'm not saying I fully expect 3 to 5% pullback at any point. It's what happens after that. That's what I'm more concerned about.
Yep.
And so I can jump around here, but I just thought this is from the piece this morning, just from an individual stock perspective, Trevor. This is the Mag 7 chart showing the performance from the April 7th low. And as you can tell, most of 5 of the 7 are just up between 30 and 45%, and obviously very good, but not too different than, say, the NDX or the S&P 500. But there are 2 really distinct outliers, and we know what they are. NVIDIA up over 90% from the low, and then Apple up about 11%, right? Just completely different complexion, and that's why probably buying the Mag 7 ETF itself is probably a better idea than trying to understand which one's going to work. So that being said, with Apple reporting tonight, we've been talking about it, and it's really, I think I talked about it first from a bullish pattern perspective 3 weeks ago, because it was getting back up to a key point. So now it's just flatlined over the last 3 weeks because people are just wanting to see what they have to say. But in terms of like rotation, I'm thinking about it. I know NVIDIA obviously has been going off for a long time, but there's other areas, like another stock in there, AMD up 130% from the low, or something else. at some point, those need to take a break. So the question is, we know rotation is going to be something that helps the market, but will there be rotation within technology? Mainly, can Apple really absorb some potential capital coming out of these other areas? And then obviously what they say tonight on their earnings call, what they, the numbers and what they talk about AI, so forth and so on, may be part of that, because that looks like a bullish pattern to me, a cup and handle pattern that could break out and get Apple right back to new highs. But you obviously need a catalyst for that. So that's one thing we're really watching over the next few weeks.
Frank, you did write about GLD, and you had a couple charts you wrote about. So maybe let's move over to there. Show us the GLD chart, what you're seeing there, but also that GLD to the S&P, which is quite interesting.
Right, exactly. So this is the GLD. So I focus on this just from a trading perspective. Many of our clients just are really focused on ETFs. And so we talk about this one a lot. And of course, on the way up, it's worked very well in terms of breaking out. And so just beginning of last week, it had looked at the last, say, 3 or 4 months of price action, and it looked like another bullish pattern. And it had a potential breakout right around 315, never got there. And as we know, over the last week or so, it's just been really a reversal. And so now it's testing a key uptrend line right now as well. And not ready to say that it's over with just yet, but if you're a generalist trader, like many of our clients are, you just want to be in the areas that are potentially going to see a breakout. And so you can't really hang around in GLD or anything that looks like that without the breakout with so many others going on. It's just an opportunity cost. So that's one way of looking at it. Now, the other part is that if you look at GLD, gold versus the S&P 500, this is now a weekly chart with just a relative line going back to really 2010 here. The most recent spike for gold to begin the year when the S&P was not doing well brought it all the way up to a resistance line that capped the last few very strong relative rallies of GLD versus the S&P 500. The one that topped in 2016, the one that topped in 2020, and now again right now. And so the concern, right, if you just look at this again with blinders on, is that the relative line rolled over after it hit that same trend line for years after, right? So that relative line, meaning the GLD underperformed the S&P 500 from the beginning of 2016 to the end of 2018. Once again, underperformed from the middle of 2020 to the beginning of 2022. So this right now, we're talking about just 3 or 4 months of underperformance. And I know your audience, Trevor. I'm not going to say anything you don't want to hear. However, I think we should all be aware of this trend that's in place, meaning that this relative trend that we've seen spike and roll over. So I think one thing that is a little bit different now is that you have a series of higher lows that have been in place since 2022. So, hopefully it doesn't need to come all the way back down to that line because there's still a lot of underperformance. But I think, if that can stabilize around that line again, then maybe you do have the beginnings, just a continuation of gold doing well, and it could outperform the S&P 500, once more. So that's really what I'm looking at from that perspective.
Yeah. Oh, that's a fascinating chart right there. I'd encourage anybody, if you are listening to this, just pull it up on the YouTube channel, and we'll make sure this is up there, because this is a very fascinating chart. We're kind of in that predicament here where, as far as relationship to the S&P, it could go any sort of direction, and we just got to remember to just put our bias aside, especially for us who, love to trade and watch the gold charts so carefully. Frank, I know we're pretty long for time, so I just kind of want to start wrapping it up, but I do want to talk to you about copper. And I know it's been a very volatile 24 hours in the copper market, and maybe you can share anything you have since then. Just a complete rug pull yesterday. Yeah. Just insanity, I think, is the best way to describe it from my seat. But, what kind of damage did yesterday's move 20+% down in copper futures? What did that do on the charts?
I mean, it's a crash. It wrecked everything, right, from that perspective, especially on a daily chart. So I think, with so much news driving this, both with the spike preceding it and now, obviously, the crash afterward, I think people don't want to touch it right now unless they're sure the language is not going to change once more. But That being said, what I have here is a weekly chart, which again, it doesn't make it look any better, but at the same time, what we have here is just looking at the CPER copper ETF. All the price action really, going back to the middle of 2022, is captured by this upward sloping channel. Now, it's been volatile before, nothing compared to this, but at the same time, that spike that preceded it took it above that line, but not by much, and the crash now has brought it back down to it. So I would say this, you got to see where it stabilizes at this point. It's still obviously very difficult to make any sense of it. But if it can start stabilizing a bit, people get an understanding of what it is, then you can make the case that maybe it's now oversold once more near the bottom of this channel, but still upward sloping, and then can make its way back up again and maybe do so in a more controlled, natural fashion.
Yeah. Okay. All right, man. That was incredible. Unfortunately, I don't know, it was going to happen anyways, but it happened after my recording with Tony Greer and Jared Dillon yesterday on the Macro Dirtcast, and I guarantee you, if that would have happened during or before that, we would have talked about it. So, absolutely insane, absolutely insane. Okay, Frank, thanks so much for your time. Very thorough rundown with some of the charts. We're going to do it again in the next couple months to see how things land, especially through this seasonality of volatility that we always expect here as we approach late summer, early fall. And tell people where they can find you and your work and perhaps inquire about a subscription.
Sure. Thanks, Trevor. You can go to capthesis.com, CAPPTHESIS, there, and find me at Frank Cappelleri on X, and I've been pretty active on YouTube as well. Just go to Cap Thesis on there, and I put out weekly videos.
All right, great. Thanks, Frank. Good to see you, my friend.
Thanks a lot, Trevor. Talk to you soon.